Jim, it's an honor to have this opportunity to discuss the market and probably the outlook, the outlook of the world with you today. Actually, I had a chance to be on the same screen with you back in March, end of March, when the market was starting to rebound. On 24th of March, we were both on CGTN, and that day you called a huge, strong rally, and that was the exact bottom of the market for this cycle. So I guess, to open today's questions, I would like to ask you, why were you so decisive in making that call back in March this year?
Well, first, Mr. Hong, I'm very flattered to be here. It's an honor to be here with you. And second of all, Mr. Hong, I make many mistakes, many mistakes. So sometimes I get it right. Whenever there's a gigantic collapse and then people start printing a lot of money, it frequently leads to a big rally. It's simple. Read history, and you will see that that's often what happens, and is what is happening now. Is it good? No. It's not good for the world, but that's what's happening. Doesn't matter what I think. Central banks think it's good, so they're doing it.
Yeah, but why on that day, though? I mean, if you look back during the March collapse, the market collapse, the Fed and the ECB, and to a certain extent, the Central Bank of China, had both been printing money all along as the market crashed down. But then on that exact day, I remember you were very decisive on the screen when you were doing the interview with CGTN. So besides the money printing that has been happening for almost the entire March, what else? What other factors make you believe that that is the exact bottom of the market?
Well, first, Mr. Hong, everywhere collapsed back then. If you went to an airport, it was empty. If you went to a restaurant, it was empty. Everything was empty. So if just opening up a little bit means things are getting better compared to what they were. And so you could see that things would be getting better than they were because everything had collapsed. And Mr. Hong, central banks in most countries are run by bureaucrats and academics. They don't know anything. They don't know about how the real world works. So they think that printing money and borrowing money and spending money is the solution to the world's problems. I know history shows differently. Yes, it's great, Mr. Hong. Great. If you give me $20 trillion, I will show you a very good time.
Yeah, I would love to see that.
We will have a wonderful time. But someday, we have to pay the price.
That's right. I agree with you. I think, on that day, I concur with you during the interview as well. So let us go back through time to a bit of when you first started your career back in the 70s. We all know that you set up the quantum hedge fund, one of the most, probably the most famous hedge fund with Mr. Soros. Back then, I read through the interview that you did with J.D. Swanger in that book, the very famous, the definite market wizard book, the original one. Right, so you were featured in one of the interviews with J.D. Swanger. I think in the interview you mentioned that when you set up this quantum fund with Soros, you were the analyst and he was the trader, and sometimes you guys don't have the same opinion on the same trade. So when such sort of disagreement happened, how do you reconcile your view? Because you are very proud to say that you're not a trader, you're sort of a longer-term investor. Well, you said that Soros is more like a trader, right? So over his career, he has made phenomenal return as well. So when you have two great minds disagreeing on the same trade, how do you reconcile those trades?
Well, first of all, Mr. Hong, I have not seen him in over 40 years. So what you're talking about was something that was 40, 45, 50 years ago. The answer to you, but I have not seen him since. The answer to your question is, Well, first of all, he owned more shares than I did. He was the majority stockholder, so in the end, of course, he had the final say. But normally we would talk about these things, and even if we disagreed and he agreed, he took his. Sometimes he accepted my position. So in the end, though, we usually always had to accept his because he was the majority shareholder. But there was no conflict. I mean, it was not a problem or anything. We worked together, and we worked together very well, looking back on it.
Right, great to hear that. Now, in that 10 years that you were working at the, while you were setting up and trading at the quantum fund, the return was phenomenal. It was like 4,200% over the 10 years when you were there. And I think that kind of performance hasn't been able to be replicated by anyone in the market. So that was like astounding achievement. Now, I would like to ask, because you exited the fund in 1980, if I remember correctly, and you actually delayed it 1 year. You were thinking about leaving the fund in 1979, and then you decided to stay on for another year. And I think you make a couple of really good calls as well back in the 80s. Now, I want to know, the environment that you were trading, the macro hedge fund environment that you guys were trading back then, is it easier to produce that kind of return? Because after that, we haven't seen anything like it. We haven't seen any hedge fund reproducing that kind of return anywhere. And also, this year in 2020, many of the hedge funds is actually not doing that well. Most notably, the Bridgewater, the Ray Dalio's fund. So I would like to ask your opinion whether you are seeing a different sort of trading environment for macro hedge funds now.
Well, you were right. I don't know I know many people who've had 1 or 2 or 3 very good years. I don't know of anyone who's done 10 years with that kind of return. There may be, I just don't know about them. I don't pay that much attention. I presume someone can do it if they wish. For whatever reason, first of all, we loved what we were doing, and we focused, we concentrated. But of course, everybody focuses and concentrates and loves what they're doing. I'm not quite sure how we did it, Mr. I mean, as I say, I loved research. I would have done it 24 hours a day, 7 days a week, if I could have. He loved the markets. He loved trading. So for whatever reason, the stars came together at that particular decade, those 10 years, and we did very well. After that, I left because I had always wanted to have more than one life. I didn't want to wake up when I was 85 and still be sitting in front of a computer on Wall Street. And they would say, oh, he was a great investor, but that's all he ever did. No, I wanted to see the world. I wanted adventure. I wanted more than one life. So I set out. I mean, if I had stayed, I would probably be rich now. But I had many other adventures, and I am pleased with what I did.
Yeah, we're very impressed as well. I think the press has your net worth at like 600 million or something, 600 million US dollars. And we all think that it's much more than that. I want to ask your opinion for the market and the outlook now. So just now you mentioned that central banks are printing money like there's no tomorrow, and therefore because of the abundant liquidity, the market will do well. But such low interest rate environment has been around for a long time now. I think ever since 2009, interest rate has been staying around the 0% level for a long time. And this time around, they're printing a historic amount of money to save the market. Now, going forward, we all know that we had a really good party in 2020. Now, going forward into 2021, what do you see on the horizon, that could be challenges for the market to perform in the new year?
Well, first of all, you say markets. There are many markets. The bond market worldwide is in a bubble. Interest rates have never been this low in the history of the world. At least China still has some interest rates. The Bank of China has done a less bad job than most central banks. But interest rates around the world and bonds around the world are a bubble. I cannot think of many bonds I would buy unless it's a special situation thing. Property in many countries is a bubble, certainly Seoul, certainly New York, certainly London. Property is in a bubble in many places. You ask about markets, and I'm just making the point that there are many, many markets. If you go to the New York Stock Exchange, the average is at an all-time high, but that's because many stocks are beginning to be a bubble. Apple never goes down. Amazon never goes down. Google, these stocks go up all the time. They're very, very expensive. But there are some stocks in America which are down in 2020. They're actually down for the year. So a bubble may be developing in New York. A bubble may be developing in some countries. But we're not in a bubble yet. But stocks in most countries are getting expensive. I bought shares recently in China, which is down 40% from its all-time high. I bought ETFs in Japan, which is down 30% from its all-time high. I bought shares in Russia. Russia's hated. Nobody wants to invest in Russia. So I prefer to invest in markets that are maybe cheaper and there may be better opportunities than in places where markets are making all-time highs. So, and as I look around the world at asset classes, I've mentioned bonds, property, shares, commodities are hated. Sugar is down 80% from its 80% from its all-time high. Silver's down 50% from its all-time high. So commodities are probably the cheapest asset class around right now.
Yeah, I agree with you. But then, for commodity to come back, because back in 2018, 2 years ago, when we do a ratio, between the commodity and stocks, especially compare commodity to, let's say, S&P, we are already seeing a significant historic underperformance of the commodity relative to S&P. And that was 2 years ago. I think, over the last 2 years, you have a little bit of technical rebound here and there, but in general, the commodity price continued to go down until recently. Now we're seeing iron ore making new highs. We're seeing oil and gas making a comeback. We're seeing industrial commodities are coming back big time as well. For example, copper is rallying quite strongly. Now, I think going forward, as you can see, I agree with you that commodity is very, very cheap. But what, in your 40, 50 years of career, what economic conditions or what other macro conditions do you see is necessary for commodities as an asset class to outperform again, going forward, sustainably?
Well, you need, as you've always needed throughout history, you need supply and demand to get out of balance. Copper right now is making as the highest it's been in 7 years. That's because electric cars may be becoming very popular, and electric cars use 5 or 6 times as much copper as a regular car. Now, are we all going to have electric cars? I don't know. You can watch, Huawei and find out whether we're going to have electric cars. But there are more demand coming for copper and some items. And so that's what causes commodities to go up and down. Sugar's down 80% because demand, for many reasons, went down. Supply was up, but now supply is beginning to decline. Down 80%. Not many people want to become sugar farmers when it's down 80% over a long period of time. So when you have supply going down, you eventually will have prices going higher, especially if demand stays up or goes up too. So as I look around, I think I see reasons to be buying commodities because supply and demand are out of balance and getting worse, and that may be an opportunity. But I'm also buying, I've told you, I'm buying Chinese shares. buying Japanese shares, buying Japanese ETFs. There are other things to buy too.
Yeah. Jim, you have been bullish on Chinese stocks for a long time now. And I think you're actually one of the first foreign investors in the Chinese market. And I think that makes you really, really famous in China. And you have many, many fans. And I think your book.
You know, I just wanted to interrupt for 1 minute, just 1 second, Mr. Owen. I bought my first Chinese shares in 1999.
That's right.
I still own them. I've never sold any of my Chinese shares. I hope my daughters own my Chinese shares someday, because China is going to be the most important country in the 21st century, and I hope my children own these shares someday.
So can I say that you're actually more bullish now on China than before, than 20 years ago, when you first bought your first share in the Chinese market?
Well, when you say more bullish, I've been bullish on China becoming a great country again for a long time. And that's going to continue. I cannot get more bullish on that, because it's going to last for 100 years. The rise, you know, Deng Xiaoping in 1978 said, let's try something new. That's going to continue for another 100 years or so. So I'm very, very optimistic and bullish on China as a country, as a society. There will be problems along the way, of course. America had many problems as we rose. But as far as my optimism about China, yes, there will be problems, but yes, that has not changed. Now, the stock market, which is different, I am optimistic. Whether I'm more optimistic, probably more optimistic right now than I have been for a while, because of what's happened in the world. So yeah, it doesn't matter whether I'm more or less. I'm very optimistic about China, and I'm extremely optimistic about the Chinese stock market.
Yeah, we'd love to hear of you. Now, the thing is, Jim, let me ask you this. This year, in terms of the virus crisis management, right? So I think the Chinese government has done a relatively good job in containing the virus outbreak. So I think now, when we, I actually am normally based in Hong Kong. So this time I traveled to Shanghai, and after I came out of the quarantine, and I see people living a normal life. So people getting together, going to restaurants, going to movies. It's an entirely different life from what I've been experiencing when I was in Hong Kong. And also the Chinese central bank this year has done a tremendous job as well, in the sense that it didn't loosen up the monetary policy as much as its Western counterparts. Now, but the Chinese market, though, isn't performing nearly as well as the US, the Europe, and the Japanese market. Now, naturally, one has to wonder why, because China has better control of the virus, especially towards the second half of the year. The monetary policy is more measured, and the economy is doing reasonably well. So why isn't the Chinese market performing as well, if not better, than its Western counterparts?
Well, again, Mr. Hong, some American stocks are down in 2020. Yes, the average is making an all-time high. Yes, Google goes up every day. But back to more directly to your question, China has certainly, what we see and what we hear, China's done a less bad job than other countries. Millions of people have died in the West, whereas China says you haven't done so badly. I go on the internet, I see the shops are open, the restaurants, the streets, the shopping centers. There are lots of people doing lots of things in China. So China has certainly done a less bad job of managing this virus and the economy. China says it was because you were prepared from, we had SARS a few years ago, and you knew what to do, and you acted. I don't know why, but maybe that's the answer. Some Asian countries have also done less bad. But as far as the economy is concerned also, China has kept interest rates low, but you still have a sound interest rate policy. You didn't do what America or Japan did, which is insane, totally insane. In Japan, interest rates are negative. China still has interest rates. Your central bank has done a less bad job. Yes, the government, Beijing, is spending money, but nothing like Tokyo, nothing like Washington, nothing like London. So you have done a less bad job, which would suggest to me that that's one reason now I am optimistic about shares in China and why shares have been doing better in China recently. And in my view, they will continue to do better.
Yeah, great to hear that. Now, let me ask you, out of curiosity, let me ask you a more personal question. I remember back, a few years back, you actually sold off your property in New York and moved your family, relocate your family to Singapore. Is your bullishness on China and, and on emerging market as a whole makes you make this decision to relocate to Asia? Or, is there other considerations where you make such a huge move for your family?
Well, we wanted to live in China. I don't speak Mandarin, which was a problem. And also in Singapore, they speak English and they speak Mandarin, which was good. And since I don't speak any Mandarin, it would be more difficult for me in China itself. And of course, China certainly then was very polluted. It's not as polluted now as it was then. Singapore is not polluted. So for many reasons, we moved to Singapore. Fortunately, my children, I don't know why, I speak no Mandarin. Mayo. My children, though, for some reason, speak perfect Mandarin. They've been on CCTV, as you know, because the Mandarin seems to be so good. They love China. I love China. They love the language. They love the culture. We all do. And they're very good at it. Much better than me. Great.
Now, Jim, beyond China, we all know that you have invested in the Chinese market for a long time. Now, beyond China, what other countries, what other asset class do you see as sort of investment opportunities going forward?
Well, if you mean in the stock market, the things that have been beaten down, there's a word in Mandarin, wei ji. We don't have that word in English. China's been around a lot longer than we have in the West. Wei ji means opportunity and disaster are the same thing. By the way, the Koreans have the same word, and the Japanese, they pronounce it differently. The character is exactly the same. They got their language from China, as you know. But Asians have been around a lot longer, and the idea that disaster and opportunity are the same thing, in Asia, everybody knows it. Now, that leads me to many things have been beaten down. Travel, tourism, airlines, restaurants, anything to do with entertainment has been demolished. So I have been buying things like that. I bought Russian shipping companies. I bought Chinese wine companies. I bought some airlines. Things that are really, really hurt badly, I hope leads to an opportunity. So when you ask me, remember wei ji. I'm sure I pronounce it wrong, Mr. Hong.
No, actually I understand that. Yeah.
Is
the moment
often
of crisis
a result
produces
of
opportunity.
Disaster.
Yeah. Yes, I actually understand it perfectly. You speak very, very good Mandarin.
I know. My children say, do not speak Mandarin. I embarrass them when I say something in Mandarin.
Now, Jim, because this is a really precious opportunity, and I'm a macro strategist. So, I may be one of those guys that you don't like as much, because you don't like trading. But my job as a sell-side analyst, I actually have to, recommend buy and sell to my investors, to my clients. So now I want to ask you, because you have phenomenal market experience. Now, I've done research through your investment philosophy. Now, I'm not sure whether I got this right. So I think you're actually a long-term value investor, right? So you actually buy value and then you sell hysteria.
Well, yes, historically,
fair.
Everybody has to find their own way, Mr. Hong, but historically, I have found I am not good at short-term trading. I am very bad at short-term trading. and I'm lazy, I'd rather find something that I can buy and that it will last forever. Then I don't have to work as hard. I just have to make sure that the main thesis is right. That's my way. And usually that people call that value investing. Well, if it's cheap because nobody likes it for some reason. Therefore, there might be value there. And if I'm wrong, at least I probably will not lose so much money. So that is a style which I found and I like. And it seems, if I've had any success, it seems to work for me. If I can find something that's very cheap, value, as you put it, where there's a positive change taking place, where something good is happening, that can last for years.
Yeah, I can see why you like China.
For instance, Mr. Wang, for instance, I'll give you an example. China. When I first started investing in China, when I first went to China in the 80s, I went back to America and said, China, China, and they said, no, 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 Japan, Japan, Japan. And I said, China, China, China. Now, I started investing in China a long, long time ago. It was very cheap, unknown, unloved, value, if you will. And that's the kind of thing that I can buy, and if I'm right, I can own for the rest of my life, and my children too. That's the kind of thing. That's the kind of thing I like to invest in.
I agree. And then China has been around for 5,000 years, so I think it fits your philosophy perfectly.
Well, yes, you know, it's interesting. If I could interrupt you for one more minute. When I went to China, I was terrified because American propaganda all my life had said that they're evil, vicious, bloodthirsty people. It didn't take me long to realize, oh my gosh, these are ambitious, hardworking, educated, cultured people. Then I realized that China is the only country in world history that's had recurring periods of greatness. Great Britain was great once. Rome was great once. Egypt was great once. But China's been great 3 or 4 times. You've also collapsed, had catastrophe 3 or 4 times. But you're the only country that after collapsing, you stay at the bottom for a while and you turn around and rise to the top again. No other country has done that in world history. So I'm optimistic for at least another 80, 100 years.
Yeah, great to hear that. Now, as you know, Jim, the Chinese market is getting bigger and bigger. And I think the Chinese government is actually opening the market access for Western investors, for foreign investors. Right? So people can actually come into the domestic Asian market and buy things that they want. Now, when I first started, doing research almost 25 years ago, there was only like 100 shares in the Chinese market. And now it's like 4,000 shares, right? So I think as a value investor, even for a value investor such as you, I think it would be sort of difficult to pick stock now because you have 4,000 stocks to pick. Now, in such a market, with increasing open access for foreign investors, with 4,000 stocks to choose from, how do you what are some of the criteria that you would use to pick and choose stocks to put money in?
Well, yes, there are 4,000, but around the world there are 40,000. I don't limit myself just to one nation or even one asset. I miss many things, but I try to look at the whole world and find things to buy. I mentioned to you silver. Well, I will be buying more silver soon. I'll be buying more gold too. Silver is much cheaper than gold. My point is I try to look at everything. Yes, there are 4,000 shares in China now. And I wish I had bought Tencent. I own many Chinese shares. Don't worry, I do not own Tencent. I wish I did. In stocks like that. That's partly because it was always too expensive for me. But as I look at China and any market, what I try to do is find something that's cheap, And that's usually based on the historic, like silver, the historic value, for instance, it's down a lot, or some Chinese shares. I try to find something that's ignored, cheap, but where there's a positive change taking place. If I can find something where a positive change is taking place and it's not exploited, then I usually will buy it, whether it's a country or a commodity or whatever, stock, but it could be Zimbabwe. It doesn't have to be just China. I try not to limit myself to just one nation. But I am lazier and lazier. You know, it's easier to not be looking at the whole world, but I love the world, so I still do it.
But Jim, yeah, you know, because you have been very successful in investing your money. Yeah, I read that you started with $600 and ended up with $600 million US, which is phenomenal success. Now, for those less fortunate though, they may
this
have
one I make many mistakes.
Right. So how do they get the exposure? Like, how do they invest? Because they have only limited amount of resources and money, right? So how do they get sort of the best exposure, best investments? How do they pick and choose? Because they only have that much money instead of $600 million US to deploy. They probably only have like $60,000 to invest. So for people with a lot less money, they can gain a lot less exposure. Right, so how do they, for smaller guys such as those, how do they get the best investment opportunities in this environment?
Well, for Chinese, as you know, I mean, China is still a closed, your currency is still blocked. You cannot, it's not a freely tradable currency like the euro or the Australian dollar or something. So Chinese are a little more limited in what they can invest in than Germans or some countries. But there are opportunities in China, and maybe there will be opportunities elsewhere. But the main answer to your question is, the only answer to your question is, people should just invest in what they themselves know a lot about. Don't listen to me. Don't listen to some guy on the TV or the internet. Maybe listen to you, Mr. Hong, but they should not listen to me or other people or people on the TV or the newspaper. If you want to be a successful investor, you invest only in what you know a lot. Now, everybody watching this knows a lot about something, whether it's cars or fashion or something. You go there every day. That's what you look at on the TV and the internet. So stay with, when you see something you know is going to work, do some more, think like an investor. Then do some more research, and maybe you will buy the stock. You will find it before I will, because that's what you do every day anyway. You love fashion. I know nothing about fashion, but you will see something changing. You will know it's going to work, so then you find it. Now, if I told you you could only have 20 investments in your life, you would be very careful. You wouldn't jump in and out. You'd be very, very careful about what you invest in. And that's how you would become a successful investor. It's boring. People say, boring, boring. No. If you want to be successful, that's how you do it. And then people say, well, just give me one hot tip. One hot tip. Mr. Hong, hot tips will ruin you. Do not invest in hot tips. Do not invest in hot tips. Stay with what you know, whoever you are, whether you're a Chinese who's limited mainly to the Chinese market or somebody who can invest all over the world. If you want to be successful, stay with what you know. There are plenty of opportunities. Whatever you know a lot about, there will be plenty of opportunities in your lifetime, whether it's agriculture, fashion, cars, whatever it is. Stay with what you know, and you will find success.
Thanks, Jim. I want to know, so back then, back in the 1987, October 19th, which happens to be your birthday as well, when the market crashed, you actually make a huge prescient call on that day, on your birthday, back in 1987. I think, your reasoning, I read through the reasoning because, you sort of lay out your reasoning, your logic during the interview. So you're basically saying that the Fed make a mistake. Back then Greenspan was saying the trade balance is going to be great, but it was actually the worst in history. And I think the U.S. Treasury was, making a huge budget deficit, that probably they can't ever repay. Now, it's the budget deficit is getting much, much bigger now. Now, if I use that reason back in October 1987, apply that set of logic to the market right now, I have to say it's quite similar, right? So we can be sure that the Fed, the central banks, they have no idea what they're doing. And the budget deficit is getting much, much, much larger now. So can I say, if I use the same reasoning, can I say that, maybe there's another market crash around the corner?
Well, I'm delighted you brought it up. I mean, sometimes I get it right, but I do make many mistakes, and that was certainly the best birthday I had ever had up until that point in time. Is this like that? We're going to have problems in the financial markets again. Will we have a 1987, a one-day crash like that? Probably not, unless a war or something breaks out. Could happen, as markets get higher and higher. I do know, Mr. Holm, we're going to continue to have bear markets. We're going to have to continue to have bad times in markets and in economies. We always have. Now, the new Treasury Secretary in America says, no, we have solved the problems, no more problems. She's got degrees from two very famous Ivy League universities in America, so she's well educated. I happen to think she's totally wrong. I know we've always had problems, and we will again. What I want to say is the next time we have one, it's going to be terrible. We had a big problem in 2008 because of too much debt. Now, debt everywhere has skyrocketed. I mean, even China has debt now. China didn't have any debt 20 years ago. Even China has debt now. So the next time we have a problem, it's got to be very, very bad. So I hope that everybody will listen to your shows, listen to the Bank of Communications. It better still learn, become knowledgeable, educate themselves, then they will become worried. And if they become worried, they will be prepared when we have bad times again. We are going to have bad times again someday. Not now, I don't think. Someday we will. And everybody watching this show should be prepared, become knowledgeable, and then you will not have any problems. In the Great Depression in the 30s, some people came out of that very, very successful. Most people lost everything. But if you will do your homework and are prepared, things will be okay, even when things go bad. Remember Wei Ji?
Yes.
Wei Ji? Remember Wei Ji?
Yeah. Crisis produces opportunities. Yeah.
Be prepared.
Yeah. But I would say that, for us who are based in China, the Chinese economy also facing a set of challenges. I would like to get your view on some of these sort of issues that we're facing. Now, one is the debt problem that you raised just now. Back 20 years ago, the Chinese just don't borrow any money because it's against the Chinese culture to borrow money. So I think later on, as the younger generation gets older, they start working, and then many Chinese youngsters these days, they basically use their credit card, charge their credit cards to buy things, and sometimes overcharge their credit cards to buy things. So in the past couple of years, the leverage ratio of the Chinese household, right, so actually increased almost 20%, right, so which is quite big, a very rapid leveraging process that the Chinese household is going through. I think in part, probably because of the property is getting very expensive here in China, especially in the tier 1 cities. And I think secondly, because the consumption habit of the Chinese people has changed. And also, I think even though the Chinese central government is doing a relatively good job, but the local government, they're borrowing municipal bonds to put money into the infrastructure spending and all that. So I think, if you look at the debt to GDP ratio for China as a country, it's not that far behind the US. I think China is at 250, 260%, and I think the US is at like 300+%. But, so even though China has a lower debt to GDP ratio, but it's already very, very high. And I think, when we sort of considering the future that we're facing, we inevitably have to, look at this issue, this debt to equity, this high leverage ratio. So what are your views on, how China specifically can sort of go over this problem, because you still have to pay back all those debt, and it's getting more and more expensive in China to borrow debt.
Well, if you don't have much debt, it doesn't matter about those guys over there. They're going to suffer, and you will come through it okay. I have noticed in the past 10 or 15 years in China, all of these companies that are doing loans over the internet. You go into an office and there are 25 young people organizing loans. Now this is a phenomenon which I had not seen before. It became big business in China, and that's one of the reasons a lot of debt increased in China, because you used the computer to make it easy. And it was great, and might still be great. Usually that leads to problems, and that's one of the reasons that China has built up so much debt. Now, Beijing has recently said, wait a minute, wait. We're going to regulate that and control that, which is good for China. I was very surprised to see how big it became so fast, but that's one of the reasons that the Chinese debt grew so much, so fast. But also nobody would lend money to China 20 years ago, but now everybody knows that China is great. So debt is easy. It's wonderful. If you know what you're doing. Debt can ruin you. Debt can ruin most people. But if you know what you're doing, sure, it's great. So the point is, China has built up a lot of debt fast. Listen, America is the largest debtor nation in the history of the world. America is going to have huge problems because of this staggering amount of debt. Japan is going to have huge problems. But China is going to have problems too. But, Mr. Hong, if you find companies and people and institutions that know what they're doing and have kept their debt under control, then fine. Do more homework on those companies and those people. But if you find people who've added gigantic amounts of debt and they may not know what they're doing, it certainly, as I say, many young people in China, but in America too now, many young people, same thing, going online, adding huge amounts of debt. But debt is not necessarily bad if you have the right people and who know what they're doing. But China has added a lot of debt. Now, Mr. Hong, that's going to lead to problems, not just in China, everywhere. But I want to remind you, America had many deep depressions as we rose. We became very successful in the 20th century. We had many depressions along the way. We had civil war. We had little rule of law. We had many mistakes, but we became very successful. You're going to have problems. Don't think you won't have problems. Every individual and family and company and country that rises has problems along the way. So you're going to have them. You just talked about the debt. I talked about the debt. I know it's going to lead to problems in China. But still, Mr. Hong, I'm teaching my children Mandarin. I'm not teaching them Portuguese. China's going to be the most important country in their lifetime. in the 21st century. Remember Wei Ji. When you see the problems, send me an email.
Yeah, we will.
And remember Wei Ji.
Yeah, we got your WeChat. I'm actually quite surprised to know that you have a WeChat account. I only knew today that you have a WeChat account, that you actually use the Tencent. I was very surprised.
My children tell me all the time, do not say anything in Mandarin, you embarrass us. So you can speak to my children.
So I don't know, like, Jim, how much time do we still have?
Well, I mean, I have the whole day. I have as much time as you want.
Jim, I've done quite a bit of research before this meeting. Another question I have is on your view on gold. Just now you mentioned that you're actually quite bullish on gold. But then when I read the interview transcript, I think you said something about you're not that bullish on gold in the near term. But then you're thinking your bullish view is on a more longer term view. You believe that gold is going to be, worth a lot more in a distant future. But then in the near term, in the next couple of years, it may not perform as strongly as many people hope. Can you sort of elaborate on that? Because in that interview, you didn't actually give the reasons behind this view.
Well, I mean, who knows if I'm right, but I do know that throughout history, when people lose confidence in economies, governments, money, they always go to gold and silver, always have. Many academics and politicians will say, don't buy gold. Mr. Hong, I'm an old peasant. All of us old peasants know that when things go wrong, we want to have some gold in the bedroom, in the closet. And I'm just an old peasant, and silver too. So I know that in the next decade, there are going to be many, many, many problems. I continue to buy gold. I expect gold to go much higher. It will get overpriced. It might turn into a bubble, depending on how bad things get. I hope if it turns into a bubble, I'll have to sell. I hope not. I want my children to have my gold someday. But everybody should own some gold as an insurance policy, if nothing else. You hope you never need it. But if you do, you're glad you have it. And at the moment, silver's much cheaper. Silver's down 50%. Gold is still near its all. So I will buy more silver. At the moment, many people in the world, in India, for instance, they have to sell their gold because they got to eat. The bad times. India is the largest gold market in the world, but other people the same thing. So sometime in the next few days, weeks, months, I hope I buy more gold and a lot more silver. But it always, throughout history, when people lose confidence, they turn to gold and silver.
Yeah, I share your view, Jim. I think gold is going to go much, much higher from here, even though it may not be immediately, but I think in the longer term, it's going to go much, much higher. And it's a good insurance policy as well. Now, I noticed that in your other interviews, you never talked about digital currency. You never talked about Bitcoin. You never talked about all this new stuff that is coming out that is sort of replacing the US dollar. What is your view?
Well, Mr. Hong, money is going to be on the computer in the future. It already is in China. I mean, you can't take a taxi in China with money. You can't buy an ice cream in China with money. You have to have it on the phone. I have Chinese money on my phone now, but China's ahead of the rest of the world as far as internet money, computer money. So money is going to be on the computer. It's going to be government money, though. Now, the crypto people say, well, we're smarter than the government. And they are. They're smarter than all governments. But governments have guns. And if government says you cannot use crypto money, you won't. Most people won't. And governments don't like losing control. They don't like losing the monopoly they have. So if Bitcoin, for instance, becomes successful as money, governments usually outlaw it. because they want to keep control. Do I like that? No, of course not. Of course not. No, but
right.
It doesn't matter whether I like it or not. Many cryptocurrencies have already disappeared. You know, there were many that have gone to zero and disappeared. In my view, if something is successful, governments will outlaw it.
That's right. Okay, and I also want to get your view on the technical analysis. I know that you didn't like technical analysis at all. You don't like look at charts, but then I read in one of the transcripts you describe how you measure market hysteria. Right, so you said, if you look at the chart, it's, if the chart is gapping up or it's gapping, the candle chart is showing a gap, then you would say that it's a market hysteria, and then you'll be ready to sell. So in a way, even though you dislike charting quite a bit, but you're still using some sort of a charting technique to, guide your trading, guide your exit decision. How do I reconcile these two sort of conflicting views?
I always look at a chart because, first of all, it tells me the history of what's happened. If I'm looking at a new investment, I want to know where it's been. Where was it 10 years ago, 5 years ago, last week? I want to see what has been happening so that I know the history and how it got to where it is now. That's very important with anything, with life, certainly with investments. So from that point of view, yes. And I have learned, if you see that everything goes up a lot every day, that's probably a bubble, or certainly not cheap anymore. So charts can teach me information, but I am not smart enough to read the charts and say, aha, now I know what to do. There are people who say they can do that, and yet who are successful at it.
Yeah, you say you never met a rich technician, a market technician in your life in that interview.
That certainly was correct. I'm sure there are people who are chartists who are successful, but I do not know how to do that, have never learned how to do that, and if there's a way, I am not good at it. So I don't. I look at the charts. I want to know what has happened. I want to know what is happening, but I do not let the charts tell me what to do. Now, if I see that kind of thing on a chart, it tells me a lesson, tells me something, and maybe I will start thinking about selling it, whatever that happens to be. But other than that, I don't usually. Well, and back to one thing I do also do, I told you before, when I find something that's hated and cheap, I do look at the chart, because if I see if it's done nothing for many years, then that reinforces my knowledge that maybe it's cheap, maybe it's hated, maybe it's an opportunity. But other than learning from charts, learning facts about what has happened and where we are now, no, I do not let them tell me what to do.
That's great to know. Well, Jim, you always make it look so simple. I think I read, in one of the interviews, you talk about common sense. You said common sense is not that common. I love this quote, and I'm going to use it in my report. Now, the thing is, for...
Well, I want to say again, because it's very important. Common sense is very important, but it's not so common anymore. I grew up in a small country town. People had common sense. It's not very common now.
So for people who is, I think in China, because the financial market is growing rapidly, a lot of kids now graduating, they want to go into the financial market to make money. I think for those younger generation of financial genius, what would be, some of the advice, some of the recommendations that you would give them, for their career development?
Well, it's happening. I'm starting to see it happen in America again. It's starting to happen in Japan and in China. We're starting to see a lot of new people, and that's mainly young people, coming into the market. They see their friends. They know they think it's easy. their friend has a story about, oh, you can't believe how much money I bought. I bought the stock last week, and now look. You're starting to hear more and more stories like that, which is always the beginning. It's dangerous. It means a bubble is beginning. I don't think it's a bubble yet, but it's beginning. And listen, I will tell them, Mr. Hong, be careful. Do your research. Learn what you're doing. And they will say, he's an old fool. You know, he doesn't understand. He doesn't understand how this works now. The new era, a new era, they will tell you. He doesn't know, he's too old, he doesn't understand. When you hear things like that, you should be very, very worried. Now, if you're 26, I could tell you that. You won't listen. You will not listen. But I know, and I will say to you, be very careful. It's all happened before. This is not the first time. Do some research. They won't do it. Don't invest unless you know what you're doing. They won't listen. That's too hard. I want to do the easy way. I will say to you, in 1999, in America, the Wall Street Journal, which was, you know, the most important newspaper at the time, started because there was a big, huge internet bubble, great bubble developing, and the Wall Street Journal started the words "new economy." This is the new economy. They started capitalizing the word "new" and the word "economy." The bubble was that big that the Wall Street Journal started capitalizing "new economy." It's a new economy. Everything is even the Wall Street Journal. These were not 26-year-old kids. This was the Wall Street Journal. They don't do it anymore. After the bubble burst in 2001, they don't do it anymore. But even the Wall Street Journal got so swept away. And that's beginning to happen again. I mean, it's happened many times in history, everywhere, and it's beginning to happen again. So I would say to the young people, you better be careful, and they will say, go away, you're an old fool, you don't know. They will say, it's different this time. And I will say to them, those are very dangerous words. Very dangerous words when you hear people say, it's different this time. Be very, very worried when you hear somebody say, it is different this time. But that's what they're all saying, and they believe it.
Yeah. So, Jim, what are some of, because you have so much experiences in different fields and also in investing your money. Now, what are some of the books that you would recommend people to read? What are your top 3 favorite books that you recommend?
My top 3 favorite books? My
Investment
books.
Biker, of course. That would be one.
Well, actually, I will tell you one. I don't have it, but I wrote a book. In English, it's called A Gift to My Children. And actually, the Chinese version is the best. It's the most developed. And that is a book. I had these children. And there were many things I kept saying, I want to make sure they know this. And so I started writing them down of things that I wanted my girls to know someday. And so finally it turned into a book. And then the Chinese version is the best version because it's more developed. And it's a gift to but it's lessons, but life and investing, many things about life and investing are the same thing. Do your homework, know what you're doing, be skeptical, think independently. So that book, I would suggest people read. It says it's a gift to my children, but it's a gift to my children when they're grown. These are things I want them to know as adults, but many of the lessons of life and the lessons of investing are the same thing. So I will name one book.
Yeah, I think I'll make sure that I'll go to the bookstore and buy it.
I hope so. My children need royalties.
So when were you last in China?
Oh, I guess I was in China in January. I was in Wuhan.
Really?
In January.
This year?
I was in Wuhan
Wow.
in January.
Unbelievable.
I'm alive.
Wow.
I didn't get the virus.
What were you doing in Wuhan?
I was
back
in Wuhan.
January? There was
Wuhan. I was in Wuhan in January. January 10th, January 11th.
But what?
I was.
But what were you doing there? What were you doing in Wuhan? Because it's winter time, and Wuhan tend to be sort of less attractive during winter time. So what were you doing there?
I went there to make a speech. Actually, I've been to Wuhan a few times in my life. I like Wuhan. I knew about the virus when I went there to speak. I did not get the virus. I did not die, and I'm okay. But I had a very, very, very good time. I knew about the virus. I mean, I think many people knew about the virus by January 10th. But I mean, here I am. I survived. So then I went from Wuhan to Chengdu, and I think that was the last time I was in China. I'm not allowed to go in. I'm not allowed to go anywhere now. And if I could, you cannot get there. There are no flights, or there are very few flights. Very few flights. I would love to come to China. Oh, I love China.
Yeah, your Chinese friends would
really
really welcome you to come. Really welcome you to come.
But if I come to China, I have to be quarantined. I don't want to do that. If I come back, I have to be quarantined. I don't want to do that.
The vaccine is out, dude. The vaccine is out. Whether I can ask you questions about Soros, even though you haven't seen him for 40 years?
Well, that's over 40 years ago. I mean,
yeah.
Might as well ask me about my first wife.
That's what I said to her that you've been away from the quantum fund for 40 years.
I mean, you can ask me, but I probably don't know. I have not spoken to him in over 40 years. So what do I know?
That's an interesting looking cup that you have. It looks like a holy grail. Your drinking cup. Your drinking cup. The silver, the cup that you're drinking water. Yeah. It looks like a holy grail.
It is silver, and she will bring it back in a moment, yes. It's actually, well, first of all, the real reason is because silver kills germs.
That's right.
And if you
it looks
use...
good. It looks really good.
Silver is safer to drink from than glass or other things, but it kills germs. I hope. At least that's what I've read and been told. So we have silver goblets here, and we drink from silver goblets.
Yeah, back in the ancient
times. We use
times.
silver knives and forks.
Yeah, back in the ancient
And we have
times.
silver chopsticks.
That's
we
right.
use silver chopsticks.
That's right.
As
That's
well,
right.
because silver kills germs.
Yeah, I think the Chinese emperor used that to test toxins in their food so that people don't assassinate them using poisonous food.
Yes,
Back then.
you're exactly right.
Back then.
So, I mean, I hope nobody's going to assassinate me. But if they want to, I have silver. Thank you. Silver.
Jim, you've been a really successful investor. Now, because now you have a really successful career already. But if you have a second choice, if you have a second chance to choose what you do back then, would you be still doing the same thing? And even if you choose to do the same thing, what would you have chosen to do if you're not doing investment? What would you do?
Well, as I look back on my life, I went to China in 1984 for the first time, and I saw what was happening. I guess if I had really been smart, I would have stayed in China. I'd be rich if I had stayed in China in the 1980s. Now, I went to America, I went around the world, I had a phenomenal, wonderful, wonderful, wonderful time, so I don't have any regrets. But I guess if I had stayed in China in the 80s, because I see what was happening, I could see, whew, this is going to be the next great country in the world. I guess if I were really smart, I would have stayed in China in the 80s, and then I would be very, very rich now. But I went back to America, had a wonderful time, went around the world a couple of times. I don't have regrets. I'm just saying that that would have been that's the one thing that I can think of that maybe I should have done differently. Well, my first wife, I shouldn't have done that. But other than that.
I see. Jim, you because you are sort of one of the greats, with many with a few other very successful investors. Now, I think from this conversation, this opportunity to have this conversation with you, I sort of feel that you are more like a longer term value investors. So if I compare you to other great value investors that are out there, say Warren Buffett, for example, right? So how is your approach different from those other guys that make you who you are today?
Well, I don't know. You'd have to ask them, but I will say that if there's an answer, and I haven't thought about it, if there's an answer, it's that I have always invested in everything all over the world: stocks, bonds, currencies, commodities, long, and I will sell short, and I will invest all over the world. I have not found many people in my life that do that. I'm sure there are many. I just don't know them. I have not found a lot of people who invest in everything. That means I can make mistakes in everything. But as I say, that gives me more chances to make mistakes. I can make mistakes in things you never heard of, because I invest in so many things.
Yeah, but Jim, how do you, when you make mistakes, in trading, right? So, especially in shorter term trading, we try to cut our losses, right? So when you're down, say 10%, for example, then you just sell out your position and just, take the loss. Now, in your experience, because you've done so many different things, and just now you mentioned that you make, your fair share of mistakes. How do you actually protect the downside, so that you can continue to grow? Because when you're playing poker, for example, right? So you don't want to lose all your chips. You want to stay in the game to play, and so that you still have a chance to win. Right? So how do you, in your career, how do you actually, even though you make some mistakes, but how do you protect the downside from those mistakes?
Well, that's a very good question. I have friends who use stop losses. You know what a stop loss is? Yeah, I have friends who use stop losses. One guy I know, if it's down 12%, he sells no matter what, if he's behind by 12%. And I know other people. I wish I did sometimes. I would be better off. But I don't use stop losses. So I don't have an answer. I wish I did. I usually, when I'm losing, when I make a mistake, it makes me do more research, do more homework to see what have I done wrong, what is wrong here, and I usually am just stubborn, and unless I find that I've really done something wrong, I had something completely wrong, I usually just stay with it, which sometimes I don't find out why I was wrong till later, but I don't have a simple answer. The only simple answer which I have seen which works for some people are stop losses. People who set a limit, and that if they lose a certain percent, 12%, 18%, whatever it is, they automatically get out. That's the only system I have seen which does work for many people. I do not use it. I wish I did sometime, but don't have an answer.
Right. So Jim, you seem to be a really relaxed sort of a guy, even though you're fully invested in the market. You weather so many storms. It's unbelievable. Now, because of your style, because you're sort of a easygoing, very calm kind of guy. So, and you put money into your investment for long term. Now, then, I can imagine that you have quite a bit of free time every day, like because you don't have to manage all this money, you don't have to do trading, going in and out of the market. So when you're free, how do you spend your free time, given now that your investment is mostly established and probably paying for themselves? So then it gives you a lot of free time. So how do you spend your free time every day?
Well, Mr. Holmes, if I'm calm, it's maybe because I don't know what's going on. Maybe it's from ignorance.
You did mention that you don't want to.
I don't have enough sense to be worried, to be panicked. But I guess the more serious answer is, as I said, when I make an investment, first of all, I don't use a lot of leverage. When I was younger, of course, I did. Now I use no leverage, so I don't have to worry about that kind of problem. And also, I think I've done enough research or homework to know when I make an investment, I'm probably going to be right, especially if I'm there for the long term. I mean, I don't see any reason to sell China in my lifetime. Now, when China has problems, okay, it's not the end of the world. I don't have leverage, so it's not going to wipe me out. And I know that China is going to be great someday. And that's correct for most of my investment. Silver, same way. I own a fair amount of silver. Well, silver's going down right now. But I'm not leveraged. It's not going to wipe me out if silver goes down in price. And it might be an opportunity, lead to another opportunity, because I know that in the next few years, silver's going to go up a lot. I think I know.
So is there any...
Maybe that's how I'm stay calm. I don't have enough sense not to be calm.
Yeah, very calm, very calm. So is there anywhere in the world that you haven't been to? Because you've been to so many places.
Well, I've been many places. There are not many that are really I want to go back to North Korea. Yeah, there are places I want to go back to. I don't really think of places that I want to go that I haven't. I've been to the South Pole. I've been to the North Pole. I've been a lot of places. No place comes to mind. I mean, I look at a map and I think, well, there are a couple of African countries I haven't visited yet. But if I really wanted to go, I would go. So I must not want to go that much. I'm just looking at the map. I've been many places.
Yeah, but now
if you know a place I should go, please
I know one
me.
place that you haven't been to, but it's not on Earth. There's this one place. So Elon Musk, he's sending people up to Mars, right? So he's setting up his new colony on Mars. So he's setting up a new country with new laws and new everything. So he's using his rockets to send people up to Mars. And I think China is, successfully doing its moon exploration in recent days as well. So we're getting moon rocks and all these moon examples back. So I think it's probably the first time in many years that human equipment actually went to the moon and collect sample back. Right. So I think now because there are enough problems with this world, so we're exploring new territories. So the new territory is the space. So Mars, Moon, I don't know where. Maybe they can even send you further than that, right? So, and I think Elon Musk probably is starting to sell. Virgin Atlantic, for example, is starting to sell tickets, right? So would you consider going, being one of the first space tourists to go up there and have a look?
Mars doesn't interest me. I mean, they don't have a disco. You can't drink beer. No. I want to go places where I can meet people and do things and learn new things. Yeah, of course, going to Mars would be very wonderful, and you would see a lot of stuff and must be great views. But that's not. I mean, I have friends who like to sail, and sailing is very good. But with sailing, I don't want to sail around the world because I can not meet a lot of people and have a lot of interactions with people. what I like about travel or seeing the world is I meet new people, I have new experiences, new food, new everything. Something is different every hour, every day. So I prefer that kind of experience rather than, I mean, Mars sounds great, but you should do that.
Yeah, I can see why you like. Yeah.
When
Maybe
you go
one day.
to Mars, please send me a postcard.
I will do that. Yeah. But
Okay.
I'll buy the book first, and Jim, when you're next to China, I want an autograph copy of the gift to my children, from you. We're biggest fan.
I will tell you, I love going to China. I want to go to North Korea more than anything right now. I cannot do it. But I think if you ask me where I would like to go next, I would say North Korea. But I cannot do it. I'm sure there are other places. I'd certainly love to come to China. I've never had a bad time in China. I wouldn't mind going out to the West. I haven't been to the West in a long time. Have you ever been to Hami? Hami. Hami Gua.
Oh, Hami. In Xinjiang.
Hami. Yeah.
In Xinjiang. Yes.
Hami Gua.
Yes.
I would love to go to Hami. I've been to Hami 3 times, but I haven't
Right.
been in a long time. There are places that I want to go, but
Yeah, Jim, do you have questions for me so that I can answer for you?
have you been to Hami?
Yes, I have. 10 years ago, actually.
You have?
10
I
years
didn't
ago.
see you. Have you been to North Korea?
Actually, no, because before this virus outbreak, I was hoping to go. Nowadays it's easier to go from China to North Korea, so you can join a package tour, and then you can go. And some of my friends went there and they sent back wonderful pictures. And they said there's actually mobile signals, so you actually get 4G signals, mobile signals in Korea, so that they can send us back, through WeChat, some of the pictures that they took in North Korea, in Pyongyang.
Well, when I went, you could not use them. There were no mobile phones, no internet, nothing. But I remind you, if you'd invested in China in the late 80s or early 90s, you'd be very rich.
That's right.
So as I said, if I'd stayed in China in the 80s, I'd be rich. I'd be rich now. And I would have learned Mandarin. So, no, there's no place I want to go. I cannot think of any questions to ask you. I could ask you what I should invest in, because that's your job. But I told you, I don't want to listen to other people.
Yes.
I only want to
I read
invest in
about
what
that
I
too.
know about. I've said to people, don't listen to other people. Invest in what you know a lot about. So I'm not going to ask you for advice. Well, I'll ask you, when will China? I'll tell you what I want to know. Perhaps one of the most important questions in the world right now, for the world and for China, is China has serious restrictions on investing for China in and out. The currency is not convertible. Beijing has been opening the currency and opening the markets for 15 years. If I were China, I would do it today. I would open the markets today. I would open the currency today. And Beijing says, we are doing it. We're going to do it. And they're doing it their way. And they certainly don't need me. When will the renminbi be convertible? That's what I want to know.
Yeah, that's a very important
The world wants to know.
Yeah, the entire world wants to know. I think probably.
Okay. My question, the one question I want to know is, when will the Chinese markets be completely open? And
In 3
more
years.
And more open. And when will the currency be convertible?
Right. I think I will answer the first question first. Which is the market openness, the market open access question. I think over the course of past 2 years, the Chinese government is opening up the financial market, and on an accelerated pace. So I think now foreign investors can have their own investment banks, wholly owned investment banks in China. They can have their wholly owned insurance companies in China. And I think in 3 years' time, they're going to have their wholly owned banking institutions in China, so they can take deposits and lend money to Chinese consumers, which is a big deal, right? So I think the Chinese government set out a 3-year timeline for this to happen, and that was 1.5 years ago, right? So I think another 18 months, we're probably going to see foreign banks in China, right? So I think it's a dramatic step forward, for a sort of a closed system starting to open up. And as your second question is on the currency. Just now you mentioned that we've been doing it for like 15 years, and I think, Jim, when you were here, the exchange rate between the Chinese yuan and the US dollar is like 1 to 10 or 1 to 12, and now it's 1 to 6, right? So 1 US dollar is equal to 6.5 Chinese yuan, and I think the Chinese yuan is strengthening, because the market sees what's going on, and I think that the market sees relative competitive advantage is rising on the Chinese side. So therefore, it's not difficult to see the Chinese currency continue to appreciate against the US currency. Now, I think, for me, if I were the central bank of China, I want to open it up right now, right? So there's no reason not to, because your currency is appreciating and money is coming this way. Therefore, you probably don't have that much of a risk that you will see a huge capital outflow, which was the original concern, and to make them decide not to open up the capital account. So now that your currency is appreciating, capital flow is flowing into China, therefore the risk of capital outflow when you opening the capital account is quite small, let's say, unless there's some sort of crisis that we don't know. But then, as you know, Jim, the Chinese culture is somehow different. We like gradualism, so we don't like radical change. Right? So we have this yin-yang thing, the yin, parts of the yin is the yang, and part of the yang encompasses the yin, and therefore, you can't, you don't actually do things in a radical way. So we do it in a gradual, glacial sort of a pace to opening up our capital account, open up our capital and financial market, but it's happening. I think it's happening. I think when that happened, Jim, you're right. When that happened, then I think the opportunity is even greater than the previous 20 years that we've seen in this market.
Yes, China has been opening and continues to open. My answer to you is China's done a fabulous job in the past few years, but this is 2020. This is not 1920. China's you say it's radical. It's not radical to have an open currency and open markets. I mean, Japan, Australia, Europe, that's not radical. But look, China's done a great job. You don't need me. You're not going to listen to me anyway. But if I were doing it, I would open it this afternoon.
Jim, maybe one last question. I think it's interesting, because just now you recommended the book, which is titled "A Gift to My Children," right? So, which is, many years of wisdoms that you put in your book. Now, besides that, in terms of family sort of inheritance planning, right? So, because you have quite a bit of wealth built up over the past 40 years. How are you planning this process, to pass on not only your wisdom, but also your wealth to your next generation? And what are they going to do with the inheritance?
Well, the best thing I can give my daughters is to think independently, to be curious, and if I can give them that, and the single most important word I am trying to teach my daughters is persevere. If I can teach my daughters to persevere, I don't have to teach them. I don't have to give them anything or teach them anything. We all know a lot of educated people who are not successful. We all know a lot of smart people who are not successful. We know beautiful people who are not successful. We know talented people that were not successful. We know people who inherited a lot who are not successful. The people who are successful are the ones who never give up, who persevere, ask questions, curious, independent. So if I can give them that, that's all they need. If I can give them some money, sure. Maybe I will give them some. I won't give them money young. I'll give them money, when they are older. In my will, it says they'll get some money if I have any, but they won't get it till they're 40. But all I want to give my girls is independent thinking, which is very, very hard. Most people don't think for themselves. Most people, if they watch the internet and it says the sky is blue, they will say the sky is blue. They won't go look. They won't look out the window to see if the sky is blue, because it says the sky is blue. Well, I don't want my daughters to be like that. I want them to question everything, think independently, and to persevere. As I said, it's the nuts who never give up and who persevere who become successful and happy. Those are the happy people in life. So that's what I want to give them. Yeah, I'll give them some gold, but I'll give them maybe I'll leave them some money, but that doesn't do any good. Many people, history shows, they inherit and they lose it all. It ruins them. It ruins them. That does not make people successful or happy or anything else. The people who are most happy are the people who have an interesting life. Well, having an interesting life means you also have hardship. You have to work. You have to struggle. An easy life is probably not going to give you happiness.
Thanks, Jim. I think we saved the best question for last. And I'm I think we are all very honored to have this opportunity, to have, so much time.
I am honored. I am flattered. But let me see your boss. I want to meet your boss. Ni hao.
Yeah.
Hey, Jim.
Ah, ni hao.
Yeah.
What is your name?
Jing Jing. I'm Jing Jing.
Means quiet. Yeah, calm and quiet.
Ni hao.
Hello.
Well, when next time I'm in Shanghai, we'll all go to the disco together, okay?
Yes.
Wherever in China, Beijing, Shanghai, wherever you come here next time, we will come to visit you. Welcome again, Everything's back to normal in China now. So welcome back.
Yeah.
Well, no. If I come to China, I have to be quarantined. That's
For
not.
14 days.
Yeah.
But maybe we all go to Hami together someday.
Okay.
Yes, Jim. Yes, Jim. And hopefully next time we can do this in person. This is great.
We can all go to Hami and drink Bao Tai.
Yeah.
That's
or
right.
something.
That's right.
Anyway, very nice to meet. Very nice
Thank
to
you,
see
Jim.
both of you. Thank you.
Thank you.
Thank you. Take care.
I hope we do it. We do it again sometime.
Yes.
Thank you.
Yes. Thank you, Jim.
Bye-bye.
Bye.
Bye now.
Bye now.